I'm Sarah Paulson-Keto. With me today is Chad Tredway, Managing Director and Head of the Real Estate Banking Business within Commercial Banking at JPMorgan Chase. Chad, thanks for speaking with Nareit today.
Sarah, I am happy to speak with you and really excited to share some views with all of your great followers.
How would you characterize the outlook for real estate lending opportunities available today?
The market is flush with capital. So we're seeing banks, insurance companies, Fannie, Freddie, debt funds, all chasing high quality assets. Now that the end of COVID-19 is in sight, I will tell you the lending environment is incredibly strong. In fact, I'd argue it's stronger than it was pre-pandemic.
What is the appetite for risk among banks active in commercial real estate lending?
Banks are taking a very thoughtful approach. And I'd say that most commercial banks came into the COVID-19 pandemic much more prepared than they did coming into the Great Recession. So structure, borrower quality, asset types were all just much better than what we saw in 2000 and 2008. And because of that, the real estate industry has really held up. What's been exciting is lenders are really looking for a few main types of assets. Multifamily has been very strong. Most lenders want to lend on multifamily. In fact, in our book, we're roughly 90 to 95% tenants paying rent across the country, which is very exciting. Industrial, so everyone who's made it through COVID-19 has had a delivery of some sort hit their doorstep, and industrial is definitely been a favorite of lenders. And then finally, I'd say that we are starting to see the market start to firm up a bit on hospitality and a bit on retail, which is very exciting.
Do you see lending guidelines shifting in response to opportunistic real estate investing?
I would tell you most lenders are gauging risk. So it was incredibly difficult in the depths of COVID to understand how to underwrite an office property. It's still difficult today. So if you're a lender and you're looking at a B or a C office property, how do you think about floor plans, investment? How are people going to work from home? So you're still seeing that shake out among all the lenders. Everyone's trying to underwrite. Everyone's trying to figure out what will happen. The same thing with retail. What's going to happen to malls? They were already struggling before COVID. Most suburban malls were struggling to hang on. COVID accelerated some of that deterioration. But conversely, you've seen some of the winners in retail. So the Design District in Miami, sales per square foot are off the charts. The Grove in California, sales per square foot are off the charts, most times higher than what we saw in COVID-19. So what you're finding right now is that banks are struggling to underwrite some of the properties that were struggling before COVID-19, but banks have a lot of conviction around multifamily, around build-to-suit, and around industrial.
What are your views on current commercial real estate valuation levels?
We are in an historically low interest rate environment. It's like the majority, I think it's something like 60 or 70%, even maybe even more of the world's debt is in negative yield territory. So with rates at such low historic rates, what you're finding is that real estate is an amazing alternative. It's inflation protected, it drives yield, and you can lever it appropriately. And if you're a CIO and you've been in the stock market, which is hitting new and greater highs, you have to rebalance your portfolio and you have to buy real estate. And so for all of those reasons, we are seeing cap rates at historic lows. So it's not uncommon for us to see a 4% cap rate on a very desirable property. And as rates stay low and people need yield, we expect that trend to continue.
What do you expect to see this year in terms of SPAC activity?
For 2020 and 2021, I'd say the word of the day is SPACs. Tishman Speyer, CBRE, so many of our clients are looking at SPACs for a few reasons. The first one is COVID really accelerated the pace of technology in real estate. And so if you're a real estate company, there are a lot of target-rich opportunities out there. And so I think you'll see even more SPAC activity in the market for the rest of 2021 and potentially 2022 as well.
And finally, can you talk about JPMorgan's focus on issues of diversity and inclusion?
We are in such a unique time. And so most CEOs, specifically the ones that are cutting edge, are thinking about things like diversity and inclusion. And they're really asking banks like JPMorgan to help them think through it. So as you may know, JPMorgan has a $30 billion pledge to really help with the racial equity gap. And it's something that we all have to think about. It's bringing in more diverse people into the workforce. It's really helping our clients understand why diversity matters. And as an industry, I believe if we all come together, we can make diversity a real priority. The thing that really blew me away too is if you look at the buying power of minorities, it's over $3 trillion. So it's the right thing to do, but it's also the economic thing to do. And it's something that I think this industry can really get behind.
Chad, thanks so much for joining me.
Hey, look, thank you for the time. Thank you for thinking of us. And we just so appreciate being included.
And for more news and analysis on REITs and real estate, be sure to visit Nareit's website, reit.com.